Thursday, September 29th. Market analysis, Stan Ehrlich. Good morning. We have about 9 o'clock California time, new lows for the trend in a few cases for the major indexes. Now you know I like to use the spider as my main chart, which is a little slow to come up. Come on, this morning. Let's take a quick peek on the one to the right here before it changes. We've got an upward slanting couple of hours, not very convincing. I need to see a lot more strength. But the important thing here is it actually made new lows for the whole bear market by an extremely small amount. Currently, we're back up above yesterday's low, the close of the day before that, the lows 2 days before that. That would be Friday, Monday, Tuesday, Wednesday, and the current quote. Again, after making a new low for the trend, usually a new low will have follow through to the downside. Secondly, we had a government report come out, GDP, that indicates that we we are in a recession, quote unquote. Frequently, bear news, bad news, comes out the worst at the bottom of a move. I could say the bottom of a bear market. I don't believe that's going to be the case this time, but I think there's a strong possibility, and I've talked about this ever since last Friday, that the market is desperately trying to bottom out. I thought I had some good news yesterday when we climbed up and closed most of the gap, not completely, on the S&P 500. Here's the daily chart. There's still a very small amount of gap left. New low for the move by a very small amount, and lower than June's low, of course, both Tuesday and today. If I see that the market is starting to make new highs, which would be above the opening, in a matter of a couple of hours and stay that way, close that way today, especially if it can get higher than yesterday's close, and on top of that, I really doubt it's going to happen, higher than yesterday's high, finish closing the gap, bullish engulfing, higher than the previous 4 days worth of highs, and lower than the previous year, I will then scream bloody murder that we probably have a low in. And from what I've been saying the last few days, that rally that I'm hoping for, expecting, pretty much still expecting, up to 390 to maybe 410-ish, is going to start to happen. But I've got to start to see more strength. No ifs, ands, or buts about that. Saying it before it happens is risky, tough, but been around the block for half a century, so we'll see what happens. DIA, no new low for the trend, lower than yesterday, coming back up somewhat like the spider, nothing particularly dramatic. The QQQ, I had a buy signal officially that didn't work on Tuesday. We made a lower low today, killing the signal. So you would have had a modest loss on that trade. Again, if we end up coming back strong enough to get up above yesterday's high, we'll have another green bullish engulfing ER buy signal. But it has to happen, and we're nowhere near there yet. So, reality is reality. I've got to see the strength. If it doesn't happen, we're going Tierra del Fuego south. Not quite sure how fast. Let's add some corroborating evidence to why I am expecting this market to turn up. Of course, I've said we're oversold, still are. We're only going to get more oversold if we go down more in the last few days. Usually markets turn up under those conditions. We left a gap behind. Some of them are closed. That coulda, shoulda, woulda been an exhaustion gap. We may still have a very broad double bottom formation, June to current. Bad news has come out. Don't know how it can get too much worse. And that is now digested, quote unquote, into the market. We'll see what happens next. Plus, interest rate futures. My. We had a green bullish engulfing yesterday. If this goes up, rates are going to go down. Granted, hour by hour, day by day. But it's starting. We came down into our buy signal for the long bond. Got filled this morning. Relatively close to the low. And so far it is high and last almost. And it could, looks like fairly easily get above yesterday's high. That would start to kick in some feelings about rates not going up anymore, or stalling out at least, if not in fact coming down a little bit. In fact, we have the same exact signal on the TY, the 10-year notes, and it has done almost the exact same thing as you might expect. So I'm liking the looks of these two signals and the interest rate futures at the moment from a friendly standpoint. They got very oversold. We have a good track record lately on the 10-year notes. We had a whopping great trade for a few months, about 14 some points. This one so far is about 9 or 10 points. And, we're out of that previous short. Sorry. We're long as of this morning with the new position. So, hey, rates may go down. That would help the indexes maybe start to go up. I think. October lows, one more reason to believe that this market is potentially turning around and starting to go back up. Although, again, it doesn't look like it. Seasonally, October is very frequently, for decades and decades, approximately high 80%, low 90 percentile, likely to have a low in it in the month. Here's the last few years. Great low way back here in 2016. Adequate, not particularly profound as far as the drop is concerned before it turned around in 2017. This is a darn good one for a while. Remember, this is weekly data. Didn't turn out to be the very bottom, but I didn't say it should be. Slightly early 2019, excellent one, 2020, and last year, maybe slightly early, but excellent also in general. And here we are, a couple of days from October, next Monday. We only got today and tomorrow. So, going down a little bit more, and I stress the phrase a little bit, I hope it doesn't crash, not expecting that, in the next few days would get you into the month of October and satisfy my interest in having a turnaround in October. Lastly, let's look at some new futures signals and or trades with the ER signal system. Just because you get a signal to buy or sell does not mean that you get a fill and you're entering the market with an actual position. The signal may work and we may miss the trade because it didn't get to our orders. So, to start with, I got the crude. We got oversold. That's not a signal. It just means the market's likely to start to turn up like interest rate futures and stock market indexes. It did yesterday and it's following through a little bit more today. Now, we had a signal a few days ago in heating oil. Didn't work exactly right, but we're starting to come right back to the highest high since that bullish signal. How about YM? Bullish signal yesterday. We talked about it a few minutes ago. Futures for Qs. Starting to come back pretty good. Almost up to the middle of today's range so far. What about high-grade copper? Yesterday we got a buy signal, flat out. Low of the break, oversold. Came back down to our trigger point this morning. High and last almost, looking good. Got in close to the low. Rallying, fine. No problem with that trade whatsoever. Gold, same comment. Except gold, after being oversold and having a false buy signal now yesterday so far, perfect. We're in almost at the low of the day. We are at the high of the day almost, and almost above yesterday's high. That's working just great as far as gold signal is concerned. Here's the 10-year notes. We looked at that a minute ago. A few days ago, I got a sell signal on platinum, bottom right hand chart, a great red bearish engulfing ER sell signal. Came down very nicely, but now it's starting to work back up a little bit, so you're either out or tightening up your stops. And lastly, we looked at bonds already, higher than where they opened, coming up a little bit better. I'm going to finish with a quick review of where the indexes are for the moment. Slipping back a tiny little bit, still working its way up sort of from the bottom. Way too early to tell anything definitive. It's only been a couple, 3 hours since the low. And with my fingers crossed, today might be it. I really think, I can't get it out of my head, too many reasons that this market is trying to bottom out. Thanks very much. Stan Ehrlich, Market Analysis. Have a great trading day.